The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli on this Friday Funk, Nadine.
Yeah, I did take a punt and brought you a glass of wine. Thought you might want one.
Thanks.
Because, it was quite the week, actually. After 4 consecutive weeks of gains, it looks as if the local market will be down by about 1%. Now I can take a sip.
Which is basically what we saw in terms of the fall today. So we know that US markets have been at or near these records. They had a bit of a pullback last night. Nvidia had blown it out of the water. But then, of course, you had that economic data, those PMIs, and just those concerns that inflation is still a bit too hot. So maybe no rate cuts coming as soon as we would like.
But it's interesting, Juliette, because a lot of my conversations today, it started with Peter Cadillo, who joined me from New York this morning. Like, nobody is seeming very doomsday about this at all. So I found this tweet, just thought it was some food for thought. This guy's a data guy. I've followed him for years. So he's saying today is the 100th day of 2024. The S&P 500 is set to be up double digits year to date. So when did it do it prior? Well, yeah, we saw bull markets still. So this guy's quite bullish. I will sort of flag that one, but still continued gains, he reckons, for the second half of the year.
The year I finished school, which of course was 2021. And those years weren't the worst years, he says, to look for continued gains in the second half of the year.
Yeah.
All right, so let's have a look at some of those themes that we were talking about.
I think you named one.
Friday Funk.
Yeah, it's a good one.
I like a bit of alliteration.
And, it did feel like that out there. I don't want to get anyone to switch off or tune out, but look, it wasn't the most dynamic day out there.
No, it wasn't. And sometimes that just sort of happens on a Friday, doesn't it?
Yeah.
Everyone just wanting to not take on too much ahead of the weekend, and particularly after we'd seen that loss coming through from
And because
Wall Street.
I forgot to mention, it's going to be a 3-day weekend in the United States.
US,
So it's the Memorial Day weekend. So again, another reason not to take on a lot of that risk. But you've got to say, for the local market, it was the interest rate sensitive sectors, but it was also, the commodity plays, because boy, metals came off.
They did, but what has also been really interesting? I had quite a lot of conversations today about commodities in both the big caps and in the small caps. Niobium, one stock that we talked to. Is it niobium or niodium? Yeah, it was a
Niobium, I think it was.
Niobium, yeah. But even just in terms of the start of the close as well, I had a great chat with a guy from CPS Capital, Keith Della Vedor, over at in Perth, talking about some of the likes that he has. So everybody's still kind of bullish on these commodities, even though they've taken a pullback.
Yeah, I was just sort of reading a little bit about what you chatted with Scuddy about as well. Do you remember Scuddy, old friend? For those of you who've listened to this podcast for many years, you can listen online, ausbiz.com.au, to Scuddy's take pretty much on the world. So gold, oil, copper, and plenty more besides. And then, of course, just ad nauseum, it's just all about rates.
It is all about rates, and when we are going to see that much anticipated rate cut from the Fed.
Retailers were the worst performing sector.
Yes, retailers today. And we've had so many warnings as well. Like this week was Eagers, we'd had Bapcor, we'd had the Reject Shop as well, all of them talking about the consumer slowing down. Wesfarmers getting a broker downgrade from Morgan Stanley off 3.5%. Yeah,
and the obviously interest rate debate is hurting some of these A-REITs, which of course are very sensitive to the prospect for this higher for longer narrative or raising rates, although nobody is telling me that rates are going to be lifted. I had a chat with Lucas Santos from ACY Securities. It's up online. He just doesn't believe we're going to see cuts coming through at all. Nor actually did Anto Joseph from StroPro. So a couple of interviews you might want to check out if you're of the mind that we are in this higher for longer narrative and you're making some investment decisions off the back of that.
Yep, okay, and having a look at the banks today, all in the red. CBA off by 1.4%. It was the worst performer today.
The big miners all in negative territory. Of course, one of the big stories this week was BHP. UBS called it put up or shut up day when it came to that Anglo bid on Wednesday. So they're still at it. It's a fascinating one to watch. I spoke with Heath Moss from HLM Investments. He says that he's a shareholder, he wants BHP to get those assets, but Scott Phillips from the Motley Fool was a little more circumspect about that.
And I noted South 32 was Macquarie's pick in terms of the diversified miners with their copper call as well. All right, quick look at energy stocks. little bit mixed. Santos and Woodside looking quite good.
Yeah, you're not saying much when that's the best performing sector of the day.
No.
Okay. Some corporate stories, and yeah, they were few and far between. We have had a couple of AGMs being held. Appen actually saw its share price rise after telling its shareholders that it expects to reach break even on an operating basis in FY24.
Perpetual lifted its stake in Star Entertainment, didn't do much for the struggling casino operator, down another 0.5% today.
Yeah, Xero, that's when we were watching. It was featured on the call today, not the stock of the day, but still, its share price came under, well, I guess a bit of give back from yesterday, even though the analysts seemed pretty positive on it.
Yeah, and Stuart Roberts, we've played that package a couple of times.
Yeah.
Really interesting one on what he thinks. He thinks it could double in the next couple of years. Wesfarmers, we talked about Morgan Stanley downgrading it to underweight from equal weight due to what they say is limited avenues for earnings upgrades, peak multiples, and of course the cautious stance from the consumer.
And I guess the washout from yesterday as well, with some of these out-of-season earnings coming through. New Farm brokerages are pretty positive on the outlook, actually. Jefferies lifting its price target by 12% to $5.30. So if you believe that, there's still quite a lot upside there to go.
All right, let's get to our Friday favourite. AMP Shane Oliver joins us. Happy Friday. What a beautiful tie,
Thank
Shane.
you.
Us through your thoughts on the market in a week when we have been down, but to our point earlier, we've also been trading at or near records on most of the key indexes.
That's right. I think you've got to allow that when you're in a bull market, you will have those occasional disappointing weeks. Some assets will have sharp falls like we've seen with copper and gold. But I think the broader picture still remains okay. I must admit I'm a little bit surprised by the reaction to the minutes from the RBA and then the Fed, which relate to meetings which were 2 or 3 weeks ago. And of course, at the time, the interpretation was those two central banks were not as hawkish as feared. Then, of course, the minutes gave a slightly different interpretation. But I tend to think it's a bit of an overreaction. Likewise, the response after the PMIs in the US overnight, I don't see any evidence there which points to interest rate cuts being delayed beyond what had already been a delayed expectation around September. So my view remains that the Fed is still on track to cut in September. When you look at other countries, the inflation numbers that came out this week, Japan today, Canada, UK, they all show falling inflation, obviously at different speeds. Interestingly, on that chart there, the UK suddenly dropped to the bottom, even though its reaction in terms of what it means for their central bank is probably the least favourable. But good news out of Canada, the basic picture on that chart there is that inflation is continuing to fall, even though we wring our hands about it occasionally. That is the broad direction. We're still going in the right direction. And when I allow for the fact that global growth is still cooling to some degree, it's not as hot as it used to be. The US labour market is still cooling, despite still very low jobless claims. The basic picture, I think, is likely to be one of still falling inflation and central banks heading towards rate cuts later this year. But it looks like the first off the cab could well be the Canadians next month and also the ECB.
Okay, so we've got your interest rate view, which is, almost like a game when you speak with people. One guest says yes, one guest says no, and we go back and forth.
Right.
But we've got your positive thoughts on that one, Shane. So when we talk about this pullback that we've seen in copper and in gold, is that the change in trend, or is it just some sort of a little correction?
Look, I think it's a correction. Both had gone to record highs, had been very strong gains in recent months and obviously on a year ago. Some sort of correction every so often is inevitable. And it seems like the somewhat hawkish interpretation of the Fed minutes was what triggered that. Prior to that, they were doing okay. But I think the broader picture, which underpinned both of those asset classes, where you've got central bank buying, particularly out of China, where you've got signs that the Chinese economy might be in the process of bottoming out. A long way to go there, but the Chinese share market clearly looking healthier. That is consistent with the strength we've been seeing in the copper price. But more broadly, the picture, I think, is still one of central banks heading towards lower interest rates. And both those assets have correlated, copper and gold and share markets, and you could argue Bitcoin, have correlated to some degree in their rallies over the last 12 months. They both had dips. They all had dips rather into that October inflation scare. They all had a dip more recently in the April inflation scare. And of course, they're seeing somewhat similar moves this week in response to the, again, interest rate cuts being delayed scare. So I think it's really just a correction. I think the broader picture for those, both copper and gold, is positive.
So if interest rates are being pushed out, Shane, why are company insolvencies rising?
I think there's a bunch of factors there. We have gone to, on some numbers, 10-year highs. We tend to look at it as a 10-year moving average, 12-month moving average, which is the blue line in that chart there. And you can see that we're back around the highs seen early last decade. Not quite there yet, but we're heading in that direction, pretty close to it. I guess there's several things you need to allow for. One is the red line shows the ratio to the number of companies. There's been an expansion in the number of companies. So when you look at insolvencies relative to the number of companies, we're really only just back to where we were pre-pandemic. The other aspect is that there's a bit of a catch-up. So we had changes to rules. You could continue trading while insolvent. I think it was the case through the pandemic. So that led to less insolvencies being logged than what otherwise had been the case. So there's a bit of a catch-up there. But you can't ignore the fact that several sectors are having big problems here. And of course, high on the list is home builders, developers. I think they've been the biggest share. Retailers are also running into trouble, and that is, I think, an indication that the economy is struggling. That it's the conditions here are pretty weak.
All right, Shane. So all is not lost. We're watching out for Waller, who speaks tonight. We're getting UK and retail sales as well. So what will you be thinking of sort of when you're getting ready Sunday afternoon for Monday morning here locally? Because obviously we won't have the lead from the US.
No, we won't. Well, here we go again. That's what I usually think on Sunday afternoon, right? If I do think about it. But it's going to be another interesting week. Didn't Waller already speak? I mean, this is the funny thing with US Fed speakers. I'm sure Waller spoke earlier this week, and he was the one saying we need some more, some more months of better data. He's always worth following because I think he's the vice chair at the Fed at present, so fairly important figure to watch. But I struggle to see how we can say anything that's going to be new. And this is why I have a problem with central bankers speaking so often. I think it just confuses the situation. But next week, the big one, of course, in Australia is the CPI numbers. I'm one of those rare economists who think that we haven't gained much by getting these monthly numbers. It gives us, and of course you, something to talk about, and traders something to trade on, but I'm not entirely convinced that the monthly numbers are worth the effort. I think the ABS could have spent their money better elsewhere. And just to give you a case in point, January, February monthly numbers were low, and then of course the March quarter number was high. So it's not necessarily the best guide, but then again, you can't ignore it. So obviously we'll be looking at that. Our expectation is for a rise of about 0.4%. April's have a tendency to be seasonally a little bit stronger. We know petrol prices went up in the month of April, and that's why we're looking for a somewhat highish number. That said, that will bring down the annual rate, I think, to 3.3% from 3.5%. So when I update that graph that you put up earlier, it's going to show the same downwards trend. If you look at the dotted line for Australia, it'll still be going down, which I think would be consistent with the Reserve Bank leaving rates on hold at its next meeting. We've also got a bunch of data here which relates to the GDP numbers coming up the week after, which is, of course, the construction numbers on Wednesday. They're probably going to remain softish, and CapEx numbers on Thursday. So it's going to be an interesting week on that front. Internationally, it's the usual run of stuff. I've forgotten precisely what comes out in the US. I think, that's right, it's the core PCE. And not a week goes by when we don't get a new inflation number coming out of the US because they have so many of them, that on Friday, the core PCE will come out. And it'll probably show somewhat better news. I think it will be down around 0.2% and show another drop in US annual inflation to 2.7%. And that's consistent with the April CPI looking somewhat better than feared after those run of hot numbers through the March quarter.
All right, Shane, always a pleasure. Have a great weekend. We'll catch you again next Friday.
See you, Shane.
Sounds good. You too. Thank you.
Okay, let's get across the stock of the day. It was Alcidion, and I'll tell you why before we play the clip.
Yes.
No news, but what we do have is an opportunity for you to become an AusBiz contributor. So join our community of contributors, we call them, and that's just so that we can continue bringing you all of this amazing content. None of our guests pay to be on the program, and I just think that's really important to put out there in the order of transparency. So it's a bit different than a lot of other models out there. But when you do become a contributor, what it means is your stock picks for our expert guests on the call shoot straight up to the top of the queue. So I thought just today for Nicholas, hello, I hope you're watching or listening, Nicholas, that we would choose Alcidion, his pick for the stock of the day. So let's take a listen what our experts had to say.
The CEO, Kate Quirk, I've spoken to her many times. I really like her and what she's doing. Had to make some tough decisions, rationalise that cost base a bit, taken $6 million off that. Had a bit of a bounce lately. I think that's the market sort of realising, okay, it's at that point now. We've got a nice fixed revenue coming in. We've rationalised the cost base, the business forecast break even second half and into FY25. I think it's at the point now, I don't own it with Merewether Capital. It's one, as I said, I've watched it for many times, spoken to Kate many times. I think I am sort of, I'm in a position I think the broader market has as well, which is just let's see, a few periods come in of that lower cost base. Let's see some growth return to the business, win a few contracts and get some tenders in.
So, it's 5.7 cents at the moment. It's a $76 million market cap, as Luke says. It's got $6.5 million in the bank. They last did a capital raise at 7.5 cents, so they're a bit underwater there. They've got no debt. The technology's cool. If you wanted a punt on the UK election and the NHS having some sort of miracle Lazarus-like resurrection from the pitiful state that it's in at the moment, and I hear stories from my family over there, it's just a catastrophe, then this could be where to play it.
So just to be clear for Nicholas and all those out there, that was a hold from both of our guests, but I should say a bit of a PS to my public service announcement earlier about becoming a contributor. You can do so. You just have to visit our website, ausbiz.com.au, and there is a little banner there that you can click on and we can get you in and helping to support us, or you could follow the links that are in our newsletters. I do hope you subscribe to our newsletters because they're pretty.
I do.
I know you do.
I know you weren't talking to me. All right, let's have a look at the after close leaders and laggards. NRW Holdings. I mean, when the best we can find is a 3% gain. Not a very exciting day. Sandfire Resources I thought was interesting because obviously Macquarie updated its copper forecast and that's their best pure copper play. So they had an upgrade on that stock.
Yeah, Polynovo, no news that I can see. Brainchip Holdings, it's just a volatile stock, that one, you've got to say. Flip side though to the equation, worst performers, and this is in terms of percentage change, Fletcher Building was one of the worst performers. It has been through a bit of a purple patch lately, that Fletcher, and we've got Emerald Resources, Charter Hall, and Treasury Wine Estates. Actually, Treasury was on the call today as well with Henry and Luke. It's down by 4%. I can't see any news, but that's quite a little fall for Treasury.
Did we have the small cap winners and losers or not today?
Oh,
there we go.
Glad you asked.
I'm glad I asked. Key Path Education up 55%. Macro Metals also having a good day. And MedAdvisor, I just spoke to them. That's a really interesting story about using their device, their app, to when you take your medicine, the timely, safe, effective use of that. So you can catch that interview shortly.
And this is actually, it honestly is a big coincidence, but that was also on the call today.
Really?
Yeah. And I'll give it away. Why not spoil you on a Friday? But yeah, it's a buy from both of my guests. Look, Henry just finds it difficult to buy because it's had such a little uptick lately, but they both really like what's happening at that company. So yeah, you can check all of that out online.
What about the losers? There we go.
What about the losers? eRoad. We spoke with eRoad today.
Yeah,
it had a great day yesterday. Yeah, co-CEOs. It had a great day yesterday, so a bit of give back there. It is cash flow positive, and they're looking to continue to grow the business, manage costs going forward. You can watch that online as well.
All right. Okay, let's have a look at what we are seeing tonight. You mentioned UK retail sales, US durable goods orders, and the University of Michigan Consumer Sentiment Survey. We've also got another Fed speaker, Waller, talking tonight. So
yeah,
a bit more whiplash, perhaps.
Talking about the neutral rate. So
right.
We'll see what comes out of that in the week ahead. Okay, we've got retail trade. We have monthly CPI. You just heard Shane Oliver talking about that one. We hear from the RBA governor, Sarah Hunter. Do you remember her? She used to be on AusBiz quite a lot. I'll be listening out. She was so smart. Listening out for that one with much interest in building approvals as well.
And having a look overseas as well next week, China industrial profits, that'll be a big one. We're going to talk to Gary Ng from Natixis on Monday about that. US consumer confidence, of course, as we mentioned, US closed on Monday, but US consumer confidence, Dallas Fed Manufacturing Index, the Beige Book, and GDP numbers coming through as well, which is a big one. Well, Friday funny.
Yeah, well, Jules, you know, we got through this whole sort of half hour without talking about NVIDIA, which was obviously one of the biggest stories of the week. Not enough to save us from, you know, a negative finish today or for the week, but check this out. This actually made me laugh when I saw it. It says, in the future, if any CEO has their company's logo tattooed on their bottom, or body, not bottom.
Ooh, excuse me, Friday funny indeed.
Had 3 sips of wine. I am buying it, no questions asked.
Okay.
Look, I don't think that's the best tattoo I've ever seen in my life, but I take the point. Do you have an AusBiz tattoo yet?
Not yet. I was planning on getting one later tonight, or at least a sticker that'll last for a week. But it could be, you know, like what happens if something goes wrong when he leaves, and then you've got to do a Johnny Depp and change your Winona forever to Wino forever. Anyway, speaking of winos forever, have a great weekend. We will be back on Monday.
Yeah.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.